Hi, in today's video we're going to learn how you can use the McGinley dynamic indicator. The McGinley dynamic is a term for an indicator created by John R. McGinley in the 1990s. He was a designation of chartered market technician. He was developing an indicator that would respond to shifting market conditions automatically. So the McGinley dynamic indicator is the result of his study. But before I talk about the McGinley indicator, how it is better than the regular moving averages, let me first talk about the moving averages we currently use. Okay, so I'll start with the simple moving average, so also known as the SMA. Okay, so the SMA works out past closing prices and divides them by the number of periods utilized in the computation. If we use a 10-day SMA, for example, we must add the closing prices from the previous 10 days and then divide by 10. So the movement of a 50-day simple moving average is slower than that of a 10-day simple moving average. So the smoother it is, the slower it reacts to price fluctuations. It can be difficult to interpret price activity during these periods of high volatility, and some false signals may occur. Okay, that's common. This may result in a loss that we would prefer to avoid. When it comes to the exponential moving average, also known as the EMA, okay, is more concerned with current pricing than with previous ones. As a result, it reacts to prices significantly more quickly than the simple moving average. Okay, it is extremely beneficial in short-term trading to find the optimum entry and exit opportunities. Trades frequently use both the simple moving average and the exponential moving average. However, the exponential moving average is not without flaws. Prices may go ahead of the market in this case, as they did with the simple moving average. So refer to the image on the screen. So now let me get back to McGinley's indicator. So now let me talk about McGinley's study of moving averages. The moving averages were determined to be flawed by McGinley. The first issue was that they were frequently misapplied. The moving averages period should be changed to match the rate of the market movements. However, deciding whether to employ the 10-day or 50-day moving average at that time is extremely challenging. McGinley proposed a solution to this problem by proposing an automatic change of the duration of moving averages based on market pace. Okay, another issue with moving averages, according to McGinley, is that they are frequently too far off from the prices. They should follow the price to provide the appropriate indications for opening a position, but they frequently fail. As a result, he aimed to develop an indicator that would closely track prices regardless of market speed, avoiding whipsaws. Okay, so during his study, McGinley developed the McGinley dynamic, which solved the concerns mentioned above. Okay, so his indication is calculated using the following formula. Okay, so this is the McGinley study of moving averages. And now the real question is, how do you use the McGinley dynamic indicator? Well, the McGinley dynamic was designed as a market tool, but it also functions well as an indicator. It responds faster than the simple moving average or the exponential moving average. In down market, its line moves quite quickly, whereas in a rising market, it moves a little more slowly. It can be used as a dynamic resistance or support line. You can simply acquire the points of entry for your trades if you draw additional support or resistance levels on the chart. So this is it about today's video. If you learned something, give this video a like. For more videos like this, go on and subscribe. So this indicator, you can use it on pocket option, on IQ option, but if you are using MetaTrader 4 or 5, I'll probably include a link where you can download this indicator. I don't think it's there in the list of indicators in MetaTrader. I have not yet seen it, but otherwise after this video I'll confirm if it's there. Once more again, give this video a like if you learned something from it. Subscribe for more videos. All the links will be in the description. Bye for now.